Coming in the wake of a massive week that saw the US election, the Federal Reserve interest rate decision, the Bank of England interest rate decision, and more, the focus turns back to earnings season for the week ahead, where we have a host of interesting names reporting. Chief amongst those, I'm going to be looking into the likes of Alibaba, with, of course, that whole Trump China theme and how that's going to be playing out. Also, the likes of Home Depot and Walt Disney. So let's jump into it. First and foremost, we're looking at Home Depot. Consumer discretionary expected to be one of the major benefactors in terms of earnings from Donald Trump coming into power. The shift between what could have been under Harris with higher taxes and what is now the case under Trump, which is lower corporate taxation, that is expected to benefit this sector in particular. However, what happened after the results was a decline for many within this sector. In particular with Home Depot, I think the rise that we've seen in terms of borrowing costs with the 10-year yield moving further towards the upside did spook many that thought that the idea that we're going to see higher mortgage rates for longer means that we're unlikely to see people spending significant amount of money on moving homes and on renovation for their homes. Nonetheless, since the FOMC meeting, we have seen Treasury yields moving towards the downside, and it has benefited Home Depot. So in terms of the numbers, what we can see here is earnings per share on the annual front expected to fall back this year, bottoming out in 2024 and start to improve really significantly. If you look beyond the next couple of years, 2026, 2027, there's some really significant growth expected there. So are we shaping up for that? And how are things playing out at the moment in a year that's expected to be pretty much the worst year that we've seen since 2020? We have seen outperformance versus expectations, though. You can see across the board in those annual EPS figures. In terms of revenues, we're expecting to see growth. So higher revenue, lower earnings, 157.5 expected on the revenues front. And so here is the breakdown. Now, generally, we see these companies as being very cyclical in nature. And you can see that once again here, the drop off for the third quarter figure expected to see a number closer to 364 down from 467. And then Q4 is expected to be even worse, as you see essentially that winter low, and then it sort of picks up back for Q1, Q2, and rises once again. So it's the kind of thing that you want to be looking at the year-on-year figures. So 364 expected, last time around 381. So a decline, like we were talking about, expected for this figure. However, it's worthwhile noting we do generally outperform expectations, but not necessarily by a huge amount. You can see in terms of those green numbers, 3%, 1%, 2%, 1.5%, 4%. Not huge outperformance, quite frankly. So I wouldn't expect, going by that we're going to see anything too different or too far removed from the expectations. You can see generally markets have it pretty nailed on. 39.25 expected on the revenues front. Let's look at the chart, though. That's the most important thing. And we have seen this pullback into the 61.8 Fibonacci retracement level following that election result. So like I said, this is a sector that is expected to benefit from a Donald Trump victory. And we have seen that initial pullback, but we've now recovered almost entirely. The expectation is that Friday is going to open up at around about that 401 mark. So if we move up through this 400 handle, then that's going to point towards a possibility that this selling pressure is over. From a wider perspective, we do have this ascending trend line, but if we do hold on to this 61.8, because we tagged it absolutely perfectly, and then break through that 400 swing high, that to me does point towards a potential bullish momentum coming into play as we head towards that earnings season. So back down to the prior low, sort of 18s, up to the next high, sort of 21s. I think it's more likely if we do break the 400 barrier, I think it's more likely that we get up to the highs than we break back below this 61.8 once again. In terms of the next company we want to be taking a look at, let me just quickly just rejig this a little bit. make sure that it kind of fills the screen. So the next company we're going to be looking at is Walt Disney. Of course, much was made about the potential for Walt Disney to chip away at the leadership of Netflix when it comes to the streaming service. They are kind of turning into profitability on that front, but I have my doubts, quite frankly. I don't necessarily think that they're going to be able to compete over the longer term. Netflix, I think, is really the only show in town when it comes to major streaming. And so we'll be keeping an eye out for those numbers. Also, what's demand looking like in terms of the parks? If we see a stronger US economy, that should be good for the likes of Walt Disney. And markets are expecting to see strength going forward. Earnings per share, we're expecting to see a significant jump this time around, 495 up to 376. So this year is expected to be a particularly strong one. And then from then onwards, it's steady growth, 517, 579 at 645. Revenues expected to gradually increase time after time as well. But notable that this year is one we're expected to see particular strength. Also notable that if we look back at the last 5 quarters, we've seen significant outperformance from earnings per share estimates each time around. 110 expected for the Q4 figure. You look back at the Q4 for 2023, that came in at 82 cents. So very strong growth expected this time around. And if we look at previous estimates, we keep outperforming on this EPS metric. So there's a good chance that we see a better than expected reading if you go by the trajectory and the trend that we've been seeing over the course of the past year and a bit. In terms of the chart, let's just bring that up. Walt Disney, you can see here, it's been really struggling to get out from this sort of base that we'd set here down around the 80 threshold originally. We just bring it out to the monthly so that we can draw this a bit better. So sort of 79 is that low, and we've come back down towards it. Generally, this provides good buying opportunities, and the bulls are coming back into play. So there's a good chance that this is the same kind of thing, right? This could be another nice bottom for this market before we see the bulls coming back into play once again. Will we see this earnings report providing greater bullish momentum? Potentially, but just look out for this step to move higher, right? We've got so much room towards the upside. In terms of, you look at previous support where we sort of bottomed out, we moved all the way up to sort of 122s, 124s, this time around 120, this time around 128. So we still have plenty of room towards the upside to work with. And as long as we don't start breaking through these swing lows, 95s and 91s, then I think there's a good chance that the bulls are going to be back in play following this bottom that appears to have taken shape around this key area of support between the sort of 80 and 84 mark here for Walt Disney. And then finally, I wanted to look into Alibaba. Alibaba, of course, has this whole Chinese theme, and it feels like companies like this are going to be straddling the fear of what's going to happen under Donald Trump and the relations with China and the potential ramping up in terms of tariffs, but also the optimism over what the actions from the Chinese government and the PBOC will do for these businesses. In terms of market expectations, there's a view that we're going to see growth, but not necessarily this year. So 832 expected this year, down from 862. And then we go 930s, 1030s, 1150s. So gradual growth expected in the years to come, but not necessarily this year. In terms of the revenues, 130 up to 140, up to 150, 160. So steady growth on the revenue side of things, the profitability side that's questionable. In terms of earnings per share on a quarterly basis, 211 expected is Q2 figure here, and then 34.13 billion expected on the revenues. In terms of the Q2 metric, comparing it to last year, well, you can see 216, so 214, sorry. So expecting to see this figure actually drop on a year-on-year basis. Last time around, we managed to outperform quite significantly, 10% higher than expectations, but the prior 2 quarters were somewhat changeable. So there's all to play for here. Certainly a mixed bag in terms of market sentiment at the moment. And therefore, it makes sense for us to be able to look at it through exactly that prism. So this is the daily chart. Let's go on to the weekly. So this looks to me like a market that's bottoming out. And certainly, considering this is a market that's heavily reliant on the strength of the Chinese economy, it makes sense that it's been really struggling over the years. But we've pulled back into this US election. And, we saw that initial gap down, but now we've gapped higher. There's an expectation that we're going to get down once again. So certainly plenty of volatility over the near term for this stock. Are we going to see them essentially prove that the actions from the PBOC are already starting to benefit them? Potentially, but look, you're looking at a country that has really questionable sort of demand situation right now, considering what's happening in terms of the real estate sector, and I don't think that's going to pick up anytime soon. So we need to see the economy turning around, and this is actually going to be a key report to show us exactly that. So trendline support worth noting down below. If you're looking out for sort of Fibonacci support, we've kind of come into the midway point. I'd say that looks like a 50% retracement thus far. There you go. So we've come into a 50% retracement. Do I think the selling pressure's over? It's difficult to say, quite frankly. I think this is probably going to be a good one to trade after the earnings because markets really want to take a look at these numbers and gauge exactly whether it is right for them to start to think that this company should have bottomed out. But certainly we've seen a nice run up, a decent retracement into that 50% zone. Looks like we're going to gap back down into that 50% retracement zone. So somewhere around here, there's a good chance that the bulls do come back into play once again. But between Donald Trump and between the Chinese powers that be trying to lift the economy, there's plenty to play for, but a lot of uncertainty ahead for the likes of Alibaba.